Permissionless 4 is right around the corner, June 24th to 26th in Brooklyn, New York. We're seeing new crypto applications cropping up all over the place right now, and this conference will be a place to get developers, investors, and founders all in the same place to have high-signal conversations about what crypto's future should look like. This one's for the memers, the dreamers, the builders, and the token lovers. Don't miss out. Plus, you can use the code Lightspeed10 for 10% off at checkout. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubinek, joined today by friend of the pod, Kash Dhanda.
How's it going, everybody?
Kash, thanks for coming on.
My pleasure, Jack. My pleasure.
So you recently just joined Jupiter after a while at Super Team. How's that transition been, I guess? What's the update from your side?
The transition is super fun, I'll be honest with you. I do miss Super Team. All my Super Team members who might watch this, I do miss you and miss the leads. But it's very cool, I would say. I've never really worked on anything at this scale before. You know, Jupiter, obviously, one of the biggest projects in all of crypto, certainly by user count and a few other metrics. So being able to make an impact at this level of scale is really refreshing. It is also very intense. It turns out, when you have a global holder base of 980,000 token holders on chain, a lot of people to talk to, basically all the time. So, I'm not sleeping as much. I got some pimples for the first time since I was like a teenager, but otherwise it's pretty great.
Good to hear. I guess we should also add for listeners, we are in Istanbul right now at a Crossroads conference.
That's right.
Yeah, so came to your neck of the woods. That's how we're getting you on the pod. You're a busy guy these days, but should be a good one. I'm curious, I've been following a lot of Jupiter news. It feels like there's been just a flurry of acquisitions over the past, say, 1 year. Moonshot, Solana FM, Sonar Watch. I'm forgetting some.
Coin Hall, Drip House,
Drip
Ultimate Wallet
was the big one recently. Ultimate Wallet as well. And I think that a lot of people see that kind of thing and say, basically putting two and two together, Jupiter's hoping to be this like everything app for Solana, and with JupNet maybe crypto as well. But I don't get to talk to you guys as much because we're kind of on different sides of the world. So I'll just pose it simply, like, what is the Jupiter end game when we're seeing all of these acquisitions and such? Like, what's the down the line goal?
Yeah, where we're getting to is indeed the DeFi super app, right? Everything that you can do on Solana, we want you to do it through Jupiter. And I think the benefits to the users are pretty massive if you can do that. Jupiter is already known for its very simple UX. It's the reason that basically everyone uses it. We're already integrated effectively everywhere, right? So any improvements that happen to Jupiter kind of carry over to the rest of the ecosystem as well. And we think that by putting things in one place, the convenience that's offered to users, and in particular, the discovery that's offered to users, becomes much more powerful, right? The hardest thing about crypto right now, if you're new, is like, okay, first, how do you get money on chain? Then, okay, what am I actually doing here? And then, okay, maybe if I learn how to trade, what can I do next? And Jupiter really is thinking to solve all three of those. So we have a bunch of great programs and products for people who are new, things like onboard, we have an on-ramp built in, we have bridges built in, we have an excellent invite flow that's fully non-custodial and decentralized. Once you're in crypto, then you can start trading, of course, whether it's spot, recurring, limit, etc. We just offer Jupiter Pro now as well because we want pro traders. And then as you get deeper and deeper down the rabbit hole, already today on Jupiter, we have perps trading, which is the number one perps trading product on Solana. We just, with Sonar Watch acquisition, we built out Jupiter Portfolio. Gam and Olivier and the team are incredible over there. So you can manage all your DeFi positions and so on. So really, when we think about acquisitions, we say, okay, who are the exceptional founders that we want, right? It's very hard to hire founder energy, right? Oftentimes you end up acquiring it, and that's what we've done. So I think at Jupiter now, there's about 90-ish people, and if I'm not mistaken, something about 15 to 20 of them are either former founders or former CEOs. So it's a lot of founder energy in the company, right? That's one piece that we really want. And the second is, rather than trying to learn something, when we have a gap in expertise, let's just go find the best people at it and make them a part of the team. So the Drip House acquisition is a great example here, right? Where one, Vibhu and his team are killers. We just know that that's tons of great energy and talent coming on. But second, we want to be the everything exchange. We want to be the DeFi super app, and NFTs are a critical part of that future. Now, whether that's just art and PFPs, or if that's real world assets or something else in the future, we don't know, but we know NFTs are going to matter. And rather than trying to learn it ourselves, we said, Drip House, responsible for more than 80% of all NFTs on Solana, millions of users, clearly cracked product builders. Let's just bring them in and have them join the team. So those acquisitions allow us to build out the super app vision much faster than we would if we tried to learn things ourselves.
You said there's 90 people at Jupiter?
Something like that, yeah.
That's fewer than I would have expected. for the
small, right?
scale of the company.
Yeah, I mean, multi-billion-dollar company, 90 people, and by the way, up until I think 12 months ago, it was about like 25 or 30 people.
No kidding.
Yeah, when the first Drupal had happened, I think it was about 30-ish people at that time.
Yeah,
quite small.
The token helps, I guess, with being able to scale up and so forth. But
it does, but we've gone the opposite route of a lot of big projects, I think, where you kind of overhire, or every time there's a new problem, let's bring someone on for it. We try to stay kind of small and nimble, and no one sleeps at Jupiter. That's the that's the honest truth of it.
Yeah. That's just interesting, because like if you had asked me to guess before this how many people, I'd say like a few hundred probably for something of Jupiter's size, even like erring on the smaller side. But that's an interesting note. I guess on the point of the acquisitions, the super app vision, I think people in like the Asia market look at like the super app idea more favorably than maybe in the US, where we don't really have super apps as much. Like you have your social media app that does one thing, but people kind of like to have the like iPhone interface with a bunch of different apps you use to do different things. So I know that's not entirely like in the crypto world, but do you worry, I guess, that doing a bunch of different things causes Jupiter to lose its edge in one thing, which right now I guess would be like trading?
I think there is a risk of that happening if we approach it in a different way. So if we were taking the same people and trying to teach them new things and kind of taking our eye off the ball, definitely possible. But a big reason for the acquisition strategy that we've had is to allow the experts who build perps like, Josh T and Anyhow and these guys who are, absolutely cracked people, they get to keep that focus on the things that they know best, and new people can kind of come in and expand it. As far as the super app thing not happening as much in America, or in the West, certainly has not been branded as such, but I think if you kind of look at a lot of the prominent apps, you'll see that many of them have something there. So Uber is in some senses like a logistics super app, right? They have courier, they have food, they have drivers, they have whatever else, now helicopters and something else. And then certainly at large scale, what you see in any kind of mature industry is that the leaders often tend to verticalize. This happens across healthcare, it goes from hospitals, now we have insurance kind of built into the hospital systems and so on. You see it in retail, obviously Amazon does a lot of different stuff. They have like a video streaming service along with like this e-commerce service and so on. And you see it in traditional finance, right? Banks are just kind of grown increasingly vertical and offering more and more things in a single place. So the brand hasn't come across out of Asia. Of course, WeChat, Grab, et cetera, are known as super apps. But I think the returns to convenience, the returns to simplicity, and the returns to brand loyalty are so high that anytime you have a mature industry and a market leader in that industry, they seek to kind of grow and create more value for their users by offering more services in a simple interface.
Mm-hmm. Do you think that my like totally non-data backed, just vibes based impression of Jupiter is it is like more East APAC focused? Do you think you can capture both the East and the West markets in crypto? And I would think it's like a different type of user that you're having to appeal to. So are you more focused like on Asia, or do you think you can kind of do both?
We're not intentionally focused on Asia. If I was to think about the user numbers, I don't even know if it's necessarily true that Asia is where a lot of the focus is. Now, the team is based in Asia. So that's part of the reason why, and a lot of the team are, Asian men and women. So like, there's a kind of a natural reason to suspect that. But given our kind of position in the ecosystem, right, where, on any given day, something like half of every Solana block is from Jupiter, right? We end up having coverage basically everywhere. A lot of the team is based there, and a lot of the kind of like early community was based there. But through some of our partner integrations, like with Phantom, Soulflare, and so on, we end up having a lot of people who are using Jupiter, even if they don't necessarily know it. But yeah, I would not say that we've had an intentional strategy of dividing anything. Even right now, I think we have something like 12 regional communities around the world, everywhere from Nigeria to India to Poland to people doing stuff in the US as well. Shout out to my guy, AliCat, and many others. So yeah, we're definitely going for a global strategy. I think that crypto is a great unifier. Crypto culture is kind of global and interesting, I think. And we just want to be everywhere that our users are. Yeah, it's something I think we in the crypto world used to talk more about when it was like the CZ versus SBF divide. right. The East versus West in crypto. But it's maybe not something that we talk about so much anymore. But I do think that there is like, there can be a way where like the US crypto world doesn't really appeal to like the Asian customer and vice versa for the types of products they use. So it's kind of a slept on divide. I don't know. And even just in media, I think I have like less insight into what's going on in a lot of those companies. And also like,
less like I think there's blind spots that I have just by virtue of being so focused on the crypto industry in the West, talking to people in New York, and not really getting to like chat with people more in the East.
I would say actually there's one interesting observation, which there is a clear divide between effectively like China and the rest of the West, which is obviously largely due to language. But I think an underappreciated fact is, and I might get the numbers slightly wrong here, but it's something like 60 to 70% of all trading volume comes out of China or Chinese adjacent territories. Like crypto is largely an Asian phenomenon. If you look at all the largest exchanges, they are all Asian, right? Binance, Bybit, OKX, so on and so forth, BitGet and so on. They're all Asian exchanges. And so by market share on the centralized side, it is quite literally above like 85% of volumes going through Asia, right? You look at Korea and Upbit and Bitnam and so on, like you see this kind of pattern across Asia. I think there's probably a bunch of different cultural reasons for it, but my sense is that DeFi ends up being more global because DeFi has no boundaries. You don't have to worry about the same kind of regulatory concerns and so forth that you have there. And so certainly we are invested in trying to become like a global brand rather than, an Asian or a Western brand.
Yeah, I wonder too if some of these plays like Hyperliquid become more regionally specified too, because like if you have co-located like validator nodes for a blockchain, or if you're just running out of like a data server warehouse somewhere, like maybe you
said it, not me. Let me be very clear. I didn't say anything about Hyperliquid.
But like, I don't know, maybe it's like your edge to be trading on Hyperliquid if you're in the APAC market versus in the US or something, and people like traders in the US that really need speed would want to trade in these like more US focused ones. Maybe that's the breakdown too, but it is interesting to think that DeFi ends up being more global.
I think that's certainly the vision of Solana, as I understand it from Toli and Raj and stuff, is so that there's pure information equality across the world, right? That if an event happens in Singapore, traders in New York can trade on it at the same time that you can in Singapore. So it depends on the quality of the decentralized infrastructure underneath. But ideally, in the best of cases, I think it creates this kind of level playing field for everyone around the world.
Yeah, I guess you need like multiple concurrent proposers before that really can like take off. Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to JUP and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. One thing I learned today, per Blockworks research, is that a majority, like a big majority for the past several months of Jupiter revenue comes from perps, which I found surprising. I guess I interact with Jupiter mostly for the aggregator. I do like swaps on Jupiter. But the fee switch was kind of a new phenomenon for the aggregator side. So I guess I'm curious, like internally, is your resource allocation mostly to perps, knowing that it drives most of your revenue, or like maybe just say more about the perps business? Because people, I think, don't really know that, or a lot of people would be surprised to hear it's like the second biggest in crypto behind Hyperliquid, which admittedly is huge comparatively, but biggest in Solana, second biggest in crypto. So I'm just curious to hear more on that side of the business.
So of course the perps business is a great one. I think it is good for Jupiter. It's really great for JLP holders in particular. So JLP is, depends on how the market's doing, but it's usually, it's almost always a top 3 asset. The JLP being the liquidity provider token for perps, because our perps is based on an AMM kind of model rather than an order book model. And yeah, it is in fact a great business. It has been for a while. Perps, and anyone that offers them knows that. It is not, from a resource allocation perspective, it is not. It's actually a relatively small team. The truth is that perps is a very complicated technical challenge. I'm not trying to minimize it, but the level of complexity on the routing side and on the spot side is, I think, probably an order of magnitude more. Don't kill me, Hao-Tien, for saying that, but we just have way more people working on a lot of our spot services because of, the data indexing alone is incredible. Plus, we support 50 AMMs, like 20 market makers through our RFQ offering called Jupiter Z. We now integrated DFlow and Hashflow and this meta aggregation play that we have that we've actually been doing for a while. So there's a lot more complexity over on that side. From a business perspective, up until whatever it was, January, swaps were always free. There was no revenue generated. And even now, you can still swap for free. And most people still do. They use manual mode, or classic mode, as I think we're about to call it. And so it's only a percentage of people that are using ultra mode right now, which is where the fees come in. And quite frankly, the fees are tiny. So it's 10 times cheaper than swapping via a wallet or a Telegram bot or anything else like that. So it was never really expected for that to be like a massive revenue driver on day one. If it was, we would have charged industry standard fees, but instead we charged 1/10 of the fees. I do think that over time, ultra mode will continue to get better. When is this going to get released?
Next week.
Next week? Probably by the time you're watching this, Ultra Mode V2 has come out, which has a bunch of really cool features, including an AI self-learning algorithm that makes swaps even better over time. It's gasless if you don't have Solana in your wallet. It's got a bunch of other cool bells and whistles. And so I think as Ultra Mode gets better, the product's only a few months old, we'll see more revenue coming there. And as the Ultra Mode API gets more integrated by our partners, that will again drive more revenue. So right now, Perps is definitely the big dog, but I think over time we'd expect Ultra Mode to drive more revenues as well.
Interesting, because I do think part of why that was interesting to me is that at least in my capacity as a Solana user, which is not as much as a lot of these sickos, but I know Jupiter mostly as an aggregator, and I think a lot of people do. That's the primary way you would describe it. So the mismatch between currently where the revenue comes from and what Jupiter is known for was interesting to me. Do you think that in, say, 5-10 years, Jupiter is still going to be known primarily for its swap aggregation, or is there a different way that people will come to think of Jupiter?
Well, if I do my job well, they'll definitely think of it a little bit differently.
Yeah.
So this is why I'm so intent, and the whole team is so intent on this kind of super app positioning, because I think it is really important to recognize that there's many things that you can do. Whether you're a more casual kind of user and you're just kind of swapping time to time, you're a pro trader in the meme coin trenches, or if you're a perps trader, and again, many more things are coming. And I think that vision will become increasingly obvious basically every quarter, because every quarter we have plans to add large-scale new projects that will offer entirely new functionality that you have not had in Jupiter to date. So we're lucky and fortunate that most people know Jupiter and they kind of know us as one thing, but that's its own obstacle, right? So as we add new value, we have to kind of figure out ways to make that more abundantly clear. Some of the products that we have coming out, I think, will fundamentally shift the way people think about Jupiter into this kind of more super app basis.
I'm sure you can't say too much here, but are those new products going to continue to be trading focused, or do you have plans to expand into social? Drip was an interesting acquisition to me because I think of them as a kind of Web3 social media, which never was Jupiter's lane. So are you going to expand out more into those other vectors, or are you just going to continue to sort of be a trading app?
Definitely planning to expand. I can't say specifically what it is, but as I say, the ideal use case or the ideal end state for Jupiter is that anything that you want to do on Solana, you should be able to do through Jupiter, whether that's through our own first-party products or through integrations of other products. And I think there are many interesting areas of crypto, of things that we'd want to add. Again, I have to be careful not to say too much right now, but there will be many more kind of things happening. Trading will always be an essential part of it, because I think trading fundamentally is an important part of crypto, right?
Many people forget this. Yeah.
Many people forget this. Yeah,
it's about the coins.
There's I say this half jokingly, but the line is that crypto is really only good for three things, and that's stable coin speculation and scams, right? And I don't think we're definitely not doing any scams. Stable coins and kind of payments more broadly, I think, are interesting, and we definitely care about the ways in which crypto can be used on a day-to-day basis, whether that's through payments themselves or other kind of use cases. But trading is an important thing that happens on chain. And I think increasingly we're going to see more capital formation happening on chain, not less. Especially, people talk a lot about equities kind of being tokenized immediately, or initial equity offerings actually going straight on chain instead of using traditional channels. So it's always going to be a big part of crypto. If you think about crypto as the financial internet, it makes sense that a lot of the use cases are primarily around financial applications like trading and so on. So that'll always be, I think, a core part, but it is far from the only thing that we want to do.
Yeah, I do. I think as time goes by, I'm increasingly interested in projects that are straightforwardly financialized, because in crypto, everything should have a business case at some level, but some people kind of obfuscate it or lie about it, kind of the way that we're actually making money. And maybe one of the worst examples of this is hey, we have this app that doesn't really make money, but we're going to launch this token to book returns for VCs and founders. And, that there's like going to be absolutely no demand on the buy side for this thing. So I kind of respect over time more and more projects that are just straightforward about how they make money. And crypto has always been about tokens, and that's like, okay. I think
it's the way it should be. Right?
Yeah. Pump fund, there's people in my Twitter replies that, I think you could argue that Pump Fund has extractive elements with some new data that's coming out, but people will be like, oh, the team is moving all of its Solana to Kraken, and it's not. I'm like, what are they supposed to do with it?
It's such an odd thing. Yeah. It's like even from our end, like when we added, so Ultramode is 10 bips fees only on volatile pairs. So stable to stable pairs are free. Sol to stables or sols to LSTs are only 5 bips. Like 10 bips is objectively a very small amount. And yet there was indeed this kind of cultural uproar. They're like, oh, they're trying to value extract or something like that. Absolutely not the case. We still offer the free offering right there in the interface. Had we wanted to extract, we would have done things very differently. I do think though that is starting to change. Any industry that starts so steeped in ideology must become more pragmatic over time. And pragmatic people that want to see long-term businesses built by long-term people rather than just scammers who are in and out have to appreciate we have operational needs. We're very aggressively growing. We need ways to fund those efforts. And we take those and we reinvest those right back into the stuff that we're doing. I'm not wearing any Gucci, you know what I mean? We're not on any yachts. We're out here, just kind of grinding, trying to make the product better and investing for the long term. So hopefully that cultural shift will happen. I will say I talk to a lot of liquid funds and, family offices, large holders and stuff like that. And it's very clear that the tides are changing for those kinds of people. They want to see real businesses with tokens attached. They don't want to just see random tokens. That's the future of this place is to get kind of professionalized where people can look at things like earnings per token and the kind of new novel metrics that right now no one really cares about.
Yeah. Before we get too far past the swap aggregator stuff, one interesting trend I've been seeing this year in Solana is an increase in competition to Jupiter. Because all throughout 2024, as I was working on the newsletter and stuff, I would be like, okay, Jupiter has this kind of killer product with the swap aggregator. You get way better prices than if you say swap through Phantom or something. Why is there no credible good competitor to Jupiter? And I think that's finally starting to change. Titan came to market. Camino released a meta swap aggregator thing. And I feel like other teams behind the scenes are building similar things. What is Jupiter's moat, I guess, in a world where there actually finally are real competitors to its aggregator product?
I think we have 3. So the first one is on a product level, all due respect to those other teams, and I think they're great, and I know a lot of those guys, and I think really highly of them. Our product is just good. The team is cracked, and it's getting better every day. I mean, we just launched Juno, our next gen liquidity engine, last week, and then, as I mentioned, we can blank this out if it hasn't come out in time, but we have Ultramode V2 coming. We're shipping at a pace that I don't think anybody else can. And product superiority is the reason we're in the position we're in right now. And I think it'll be a critical reason that we kind of maintain that. So that's the first mode. It's just the product is better. The second thing is around the community, right? The community of users and the daily habit that people have built using Jupiter is really hard to replace, right? The brand value is oftentimes under-discussed in crypto, where people are mostly looking at okay, what is the financial engineering or what is the incentive structure? And people forget that, especially at scale, brand really matters, right? And Jupiter is a trusted brand that has been around for a long time. It is the first place that people go to when they think about swapping. And I think that's hard to change. It's not impossible, in the same way that it's not impossible that someone could build a better product, but we haven't seen it yet, right? Even the other people that are in the game right now, they use Jupiter routing for their products as well. It is worth pointing out, if I can make a quick clarification, on some of the teams that you mentioned, they're using Jupiter Metis V1. So they're actually using an old version of our product. And so in their own product, they're using kind of just an older version. It's still a great product. It still works. It's kind of undergirded a lot of Solana's growth over time. But, the JUP AG product suite is much better than what you see those other teams kind of representing as the Jupiter price. And I think most people don't appreciate that. And then finally, I'd say the third moat that we have that is really hard to overcome is the integrations. We've invested a lot of time and energy into our developer suite. We are the most integrated platform in all of DeFi. So even if your individual product is quite good, and even if you can build the brand trust in the community, both of which are very difficult to do, you then also need to go through and convince everybody else to change over to your API, which is not an easy thing. So I think there's multiple moats that kind of protect Jupiter ultimately. Of course, we're not perfect. We're not invincible. The challenge is there, and it's great because it keeps us on our toes as well. So it's good to have other people in the game.
On that point with meta aggregators using an older version, my understanding is that Jupiter now uses like a request for quote program or something like that. Can you explain actually what the difference is between the legacy version of Jupiter and the RFQ? Because I think that's something I've never really grokked.
Yeah, I would love to. Thank you for asking. No one asks, but I'm glad that you're asking, buddy. Okay, so basically, Menace V1, which again is very good and was built to be reliable, right? Like that was the key thing. Because we were scaling and powering basically all of Solana DeFi, the most important thing was that transactions went through, right? That was the kind of critical thing. And especially with, a lot of the meme coin stuff, like it became more volatile and harder and whatever else. So we were just looking at all the on-chain liquidity in these AMMs, right? And I think we have, I forget the exact number, call it 50 of them that have been integrated at some point. That's kind of Menace V1. In Juno, which is our current kind of engine, it's all the on-chain AMMs plus the RFQ system. So RFQ is a request for quote system. We call it Jupiter Z is the name of the product. And what we're doing there is aggregating not just the on-chain liquidity that's in AMMs, but any of the liquidity that market makers might have around the world. So market makers maintain inventory to fill orders, typically on centralized exchanges. We brought them in. If I'm not mistaken, we have about 18 of them right now, supporting up to 90 token pairs, where it can route either to the AMMs, like it'll route either to Meteora or Orca if the price is better there, or it'll route to the market makers if the price is better there. And the really cool thing there, the RFQs, gasless, right? Because the market maker is kind of facilitating the trade, and there's absolutely no slippage. The exact quote that you get comes. So we look at both of those and then decide which one is going to be the better price. And now we have a third component, which is the other aggregators that we've added in as well. So as I mentioned, Hashflow and DFlow, with many more to come. What we'll be able to do with Juno is look at the best price. Okay, is it on the AMMs? Is it with the market makers? Or is it with some of the other routers? And have they found a better price that we can get? And then we will give the end user whatever the best price is there. And so I think that is really, when we think about, what is the best possible trading experience, that's what you want to see. It's not just what is the best price quote that we can give, but what is the best execution. And that's only going to come if you're looking at multiple sources. And so I think that's a fairly dramatic difference. I mean, I don't know if we've said this publicly, but Jupiter Z is doing about 10 to 12% of all Jupiter volume right now through these market makers, right? Because the quotes are quite good and the execution is excellent and there's no slippage and so on. So yeah, I think that's going to increasingly become a bigger thing over time.
Yeah, I was talking to somebody who's pretty integrated in the Solana trading infrastructure scene recently, and they were basically like predicting to me like it's all going to go through market makers in the future. The AMM system is kind of doomed for like structural reasons. You also have this interesting thing of like SolFi and Orbic and some of these very opaque new market maker type teams that doesn't get talked about a lot on Solana, but if you look at volume numbers, they're like leading the pack right now.
Yeah. That's right. Well, I would say first, I don't think AMMs are going away. I think that like the AMM model was really important, in particular for long tail assets. Like in order to onboard a market maker, there's days to weeks of kind of negotiations, there's contractual relations, you have to give them inventory, you have to use either, this loan and call option model. Like it's complicated is the basic point. Mm-hmm. And on Solana, even right now, we're doing 20, 30,000 new tokens a day. Like you're just not going to see a lot of market makers pick those up. Market makers will always be aggregated towards, or always be kind of incentivized towards the fat end of the power law distribution. Mm-hmm. So I think AMMs will always be useful for the long tail. Now, it's possible that over time, if the power law continues to increase, that you end up seeing market makers having a bigger share. But I don't think that it is, I don't think everything will go to market makers over time. And as for some of those teams that you mentioned, it is also surprising to me, quite frankly, that no one talks about them. We are happy to route through anyone that can offer the best price and the best execution. So if that is one of the teams that you mentioned, if it is a more popularly known team, that's fine. We work with everybody. There's no one that we don't want to integrate at some point. Do you have a sense of like why it is so opaque or why no one talks about it?
My understanding.
Now we're getting spicy here.
I only have and have heard guesses. I actually don't know conclusively who's behind them, but my understanding is sort of just that they built a super good product that's like very technically sophisticated and can get you the best prices. And probably if you built this really good product, you wouldn't want to be just like advertising it all over Twitter. You would just want to integrate directly. It's kind of like, market making firms like the Citadels of the world. Like if they have some edge, they're not going to go advertise it a bunch.
Yeah,
so
that's true. I think that is probably true. I think that it is actually one of the most underappreciated things that Jupiter did for the ecosystem is in other ecosystems where the AMMs themselves have all the brand recognition, let's say Uniswap on Ethereum is the obvious example, people just go to Uniswap, right? And they go direct to Uniswap. But in Solana, because Jupiter was able to aggregate all the liquidity, it allows the best tech to win. Because no aggregator has to go out and do the hard kind of consumer branding. Like, so again, some of the teams you mentioned, they don't have to be out there on Twitter. They don't have to throw big events. They don't have to do any of that stuff. They can just focus on the most innovative tech. And then Jupiter is able to service and surface their innovations to everybody else. So in that way, I think Jupiter has actually made Solana much more meritocratic than it would be otherwise.
Interesting.
I don't, those teams that you mentioned, I don't think they're doing anything shady, or they just are builders and they want to focus on building. And we're happy to give them flow if it leads to the best price and the best execution for users.
Yeah, I think it's maybe like an obvious trend that was going to happen over the long term anyways, is that a lot of the market making flows would be like privatized. Because again, like in traditional finance, if you have some kind of edge trading wise, you want to be very opaque and not like open source it essentially. So that would be my thought.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to JUP and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem.
One idea I've been playing with recently that I want to crash test here, we're at a conference, it's the place for crash testing ideas, is like the relationship between Solana apps and Solana itself. We know that Solana app revenue is the highest in crypto. It actually has been growing, I believe, more like proportionally more quickly than REV. So like app revenue's up more than the amount of income, I guess, that validators are generating is how you could think of it. That's point one. Point two, on Ethereum, the ETH token has performed horribly for a long time, largely because the L2 scaling roadmap, I think, was a huge mistake, and these L2s are parasitic to Ethereum. There's no good way to actually meaningfully create revenue back to the L1 because it all goes to these single sequence
or at least
L2s.
Not that justifies the extraction of revenue. Yeah, like the blob fees are there, but they're minuscule relative to
they're never
cost.
They're never going to get big enough to
almost by definition, right? Otherwise, you wouldn't need the L2s. So,
exactly. That's point two. So then the question is there a world where Solana's apps become parasitic to Solana, the network, in the same way that L2s are parasitic to ETH, especially when you see a trend of a lot more activity happening off chain? Maybe it, like, for one example, is like some of these network extension-y type things will do things off chain to get like faster trading execution times, because if you want to compete with sexes, you can't really do all that stuff on chain. So yes, can apps become parasitic to Solana?
I mean, I guess it is in theory possible. I think that like one of the benefits of Solana DeFi, and one of the reasons that, Jupiter is on Solana and only Solana, is because of the kind of composability benefits that you get. Like all the users are there, all the liquidity is there, and the UX is so seamless that if you try to kind of separate off too much, I think that you can have some like UX degradations that would make it less likely to succeed, versus with Ethereum, an L2 actually has like a UX improvement relative to the L1, right? So I'm sure that there are some like narrow use cases, as you say, like exchanges. I know like Cube Exchange is doing some cool things with like a subnet, if I'm not mistaken. But I don't know. I don't see it as a likely trend overall, because I think a lot of the value, and especially if you look at a lot of the biggest apps, like why are they making a lot of revenues? Like Jupiter, we do pretty good on the business side. We have to be on the L1, or we have to be on Solana because that's where all the liquidity is, right? If you look at Jito, it's like they have to be on the L1 because that's where the liquidity is. Pump Fund, again, that's where all the traders are, and that's where all the liquidity is as well. So it's harder for me to imagine. I guess it's not impossible, but I don't think it's parasitic. I think that would be the wrong like frame in my mind. I think of it like the old school I'm an old man, right? I think of it in like the Microsoft way. Like, what did Bill Gates say a platform is? You are a platform where by definition, the people building on top of you make more money than you do. That is a good and right end state for the world. And that is where excess value creation comes from. Jupiter, we've done well. Our partners have made more than $500 million using our APIs. We have not made $500 million, right? Like, our partners make much more. That makes us a platform. And then, Solana itself is making a lot of money, but the partners on top should be making more money. That's what makes it, I think, an exciting and interesting platform for people to build on. On the technical level of the network extensions, I think it ends up being kind of a case-by-case basis and how popular do they get and so on. But I think that apps on Solana, here to stay, hopefully will keep making more money. And that is the good and natural way of things.
So rationally speaking, you would think that over a longer time horizon, apps, like assuming no goodwill, just like purely, state of nature type thing, apps would want to increase their take rate and send less to Solana and find ways to maybe do roll-up-y type things and just settle less data to the L1. Is there a world where basically this happens and the Sol token over like a long time horizon is worth zero? And maybe like people are kind of right in the short term, wrong in the long term on that token?
I think again, hey, anything's possible. Yeah. I don't do financial advice anywhere.
Yes,
but the only financial advice, Solana's not going to $0. Like that I'm pretty well sure of, at least not for a long time. But no, I don't know. It is a constant question for, the Solana Foundation, the labs, the teams, Anza, and everybody else who's building the network. How do we ensure the teams that are building here are getting more value out of it than we are taking from them? And I would say that the quote-unquote take rate is actually quite low on Solana, and it's quite like friendly and amenable. And I think for every founder that I know, there's still tons of excess value to be had there. At some point, if that take rate were to increase more than the marginal benefit that you get from being on the L1, of course, that would kind of change the calculus. Even then, I think it's probably tough. One of the real advantages that Solana has right now is a great brand, right? Going back to that idea of like, it's not just about technical innovation, it's about user trust and so on. Solana has a great brand, and I think everyone benefits from that brand being so good. It'd be like, in a far off world, you can imagine that like, let's just say like whatever Walmart or something started in, I forget the city that it started in, but like, let's say that it started in St. Louis, right? And then they got so big, they're like, oh, we don't want to pay any more city tax. We're going to build our own city in Utah or whatever. Okay, maybe, but then you lose all the talent that lives in St. Louis. You lose all the kind of network effects that benefit from being there, whether it's suppliers or logistics, et cetera. So moving off has a lot of costs that I think are not oftentimes appreciated. By, certainly not by earlier builders, but the bigger and bigger the business gets, the more risk is inherent in moving it. And most people who have successful large scale businesses are not trying to take a lot of risk for like a marginal few basis points on the edge.
Yeah. And before people come slaughter me in the YouTube comments, I don't necessarily think...
Thinking out loud over here. I like this idea that the conference is a time to kind of explore ideas. Mostly for me, it's a time to take selfies and take naps. Exactly. I like your version of it much more.
No, that's one. The other goal this conference is don't just talk to people I talk in New York. Talk to New York. It's such a game of like... I'm doing an interview with Austin Federa today, who I'm pretty sure lives in New York. So it's like, I could have interviewed him back home.
Travel halfway around the world.
Yeah, exactly. That's just the way things go, though. Yeah. Jupiter has a token.
In fact, we have 3.
Yeah, multiple tokens. I'm curious about JUP because I know JUP announced that it's doing this kind of buyback and burn program at Katzdenbowl a couple months ago, and I think there's this how to put this. So we had the Zora token a few days ago, which famously is purely for fun. There's no inherent value. Yeah. And Zora, I pick on them, but they're not the only example. Some companies basically said, due to theregulatory headwinds and other reasons, I guess, we're just gonna have our native token trade like a meme coin. Mm-hmm. There's other examples of Jupiter. Jito did this with JTO a bit, and it's not fully in an end state of, in most cases, of revenue sharing with to the token, maybe for regulatory reasons as well. But with the JUP token, how do you think about having utility and use for it? And I guess after the airdrop, and we had all this string of big Solana airdrops, but a year after the airdrop or whatever, what does the purpose of the token become within the Jupiter ecosystem?
So first, just to clarify, we have, you mentioned buyback and burn. So there's actually two separate things. So there was one burn that we did at Kash Dhanda where we burned 3 billion tokens out of the supply, which is one thing. And then there's a separate JUP accumulation plan, is what we call it, where a third-party entity called the Litterbox Trust receives 50% of all Jupiter Protocol revenues. And then that entity accumulates JUP. And so far, they have about 32 million JUP tokens, which is like $15-16 million or so value today.
But the Litterbox is functionally a burn?
They are locked for 2 years, so they're not literally burned. And the idea, we're still kind of figuring out what will happen. And right now, a lot of the interesting ideas are we want to use it for community and ecosystem growth. I think that the whole idea around burning all the tokens, there's a lot of folks out there, if you listen to crypto Twitter, they're like, every project should only have one token. And that's the way to increase the price of it, is burn every other token. It's just one, right? Like, tokens are useful things for aligning incentives, for kind of community currency purposes. They help people form more of an attachment and identity and have an ownership stake in things. So I do think that it is useful to have tokens. So we're not trying to burn every last token that we have. We burned a lot. We burned 3 billion of them, right? That's a lot of burn. When I think about the JUP token specifically, I think of it as the GOAT token. And that's an acronym GOAT, right? And so fundamentally, it is a governance token, first and foremost. And I would grant you that in 99% of cases, people say that, and that's mostly just saying it's a meme coin with fancier words, right? Most DAOs, if you look at them for governance, how many average voters do they have? 50 to 150. How often are they doing proposals? Once a quarter, right? It's like it's just erroneous to call them governance tokens. Jupiter is an actual governance token. So we have done 22 proposals in the last 12 months. We have 450,000 staking wallets, and we regularly have like 200,000 wallets vote, or 200 to 250,000 wallets vote per proposal, right? So that's not one order of magnitude bigger. That's like 2 orders of magnitude bigger than most everyone else. So our governance, I feel, is actually meaningful and contributes meaningfully to the future of the token. For example, the burn itself was voted on by the community, and the proposal and the way to do it was informed by the community and token holders. Jupawary, we did a second Jupawary. There was actually a DAO proposal of like how we would structure that second Jupawary airdrop. That failed because people were like, no, we don't like this. Token holders were like, this is not the right way to do it. Took a bunch of feedback in, came back, put up another proposal, that one passed. That's meaningful governance, right? If the team could just decide whatever we wanted to do anytime we wanted to do, it would not be meaningful governance. And so to the degree that you believe that governance matters at all, then I think that JUP is really in a class of its own as far as governance goes. And I do think that there is, whether you call it utility or usefulness or some intrinsic value to it, that's up for the market to decide, not for me. In addition, I would say, so meaningful governance, but a core viewpoint of mine, and I know Meow agrees as well, all coins are meme coins to some degree. I would say everything is a meme thing, right? Like equities are meme equities a lot of the time, right? And yes, the meme that matters there is like whatever PE ratios or something like that, which doesn't always matter if you look at like whatever Tesla and GameStop and all these other stocks, right? But every kind of investment asset has its own kind of jargon and language that people who talk about those assets use almost as like a fence to keep other people out. To be like, no, there's actually something very meaningful going on here that you don't understand. And I think that tokens are, when they're done well, they kind of admit the fact that we all understand. It's largely narrative based. Narrative follows from fundamentals, but not only. It follows from other things like general macro views and community sentiment and energy and vibes and everything else kind of fit in. And on that side, I would say that Jupiter is also kind of like in a class of its own. So we're fully organic. We don't do any OTC deals. We don't have any KOLs that are paid. We don't have any kind of shady things happening behind the scenes. All of our treasuries are public and people can view them every time. It has this real alignment factor through the JUP accumulation that I mentioned before, where the better the business does, hopefully token holders are also benefiting, which creates this nice alignment loop where token holders have a reason to evangelize the products. Again, that's not something that exists for most tokens that are out there. And it's the most transparent. We do transparency audits every 6 months. And I do believe, as a bit of an aside, in the following 6 to 12 months, we are going to see a transparency premium added to tokens. As the investor base becomes more sophisticated, investors who are used to looking at whatever regulatory filings that Apple has, it's hard for them to come to crypto and be like, I'll just, scroll through their Twitter page and that's how I'll know what's going on. Like, that's not a thing, right? And so we have really led the way there with these transparency audits. So anyway, that's a long answer, but there's a lot I can say about the JUP token. I think of it as the GOAT token, and that's where its value kind of comes from. It's from a mixture of the governance, from the alignment mechanisms, from the transparency premium, and of course, just from the vibes of it all and the growth story that's coming up.
Yeah, I think that's a good piece to end on. Kash, it's been a really fun discussion. Thanks for taking the time to come chat.
Anytime, brother. An absolute pleasure.
Totally. Kash Dhanda, live from Istanbul, everyone. Thank you so much for tuning in. We'll see you again very soon.
Like, follow, subscribe, retweet, all that kind of stuff.
Doing my job for
I do a little content, you know.
Cool. All right. We'll see you, everyone.
Cheers. Bye.